Hi, welcome back to the channel. This video is another update on the situation with regards to Russia. And what I'm trying to cover in this series of videos is the financial impact on the global economy of what's going on in Ukraine right now. And the impacts are far-reaching and they're multifaceted. So I'm trying to cover off as many different aspects as possible. And in today's video, I'm going to look at two big picture issues. The first relates to commodity prices. So Russia is a resource-rich country. It has a lot of natural resources and they are exported all around the world. And we're now seeing sanctions and embargoes being imposed against Russia. So that means that the supply of those exports will be limited in some markets around the world. And when you have a limit in supply, simple economics tells you that that will drive up prices. So there are potentially some options for the Western world to start sourcing some of these commodities from other places, but that takes time to put those processes in place. And so in the short term, there will definitely be a shortage of a lot of different commodities. So in this video, I'm going to run through what's going on with some of the key commodity prices right now. We have seen a real jump in prices already. And this is really just on the expectation of the shortages, because at the moment we've still got stocks, so nobody's really running desperately low of any of these commodities in the short term. But the markets always look ahead. They're always looking to see what's going to be happening in the future. So we're looking 3, 6, 12 months down the line. So we'll go through some of those prices, and it is quite concerning. I'll then move on to talk about another big issue, which is the relationship between Russia and China. So the Western world is currently cutting all of its ties with Russia. We're seeing a lot of companies telling us that they no longer want to deal with Russia. They're going to walk away from their joint ventures that they have in Russia. And so that's leaving a hole in the market. And China is obviously a really powerful country, and it has a lot of cash and a lot of capital to invest. And it's been investing overseas for a long period of time. So there is a real chance here that as the West exits from Russia, China will step in and take its place. And that will strengthen the alliance between China and Russia, because China is Russia's biggest trading partner, both for imports and exports. So they've already got a very strong bond. So it's highly likely that the Chinese-Russian relationship will grow through the course of this crisis and beyond as the West looks to cut Russia off. So that's a concern from a geopolitical perspective, but from an economic perspective, it also has some implications. So we're going to have a look today at what's happening with regards to the banking situation in Russia. If you've been following the channel, you'll know that the international finance markets have been cut off for Russia, and it's interesting to see what's going on because it looks like the relationship between Russia and China on the banking side of things is already starting to strengthen, but I'll get into more detail in that later in the video. I'll then go on to talk about what's happening with the Russian oligarchs. And the oligarchs are a group of incredibly wealthy individuals who've benefited from the breakup of the old Soviet Union. They took over a lot of the industry in Russia, and the Western world is now identifying these individuals as a risk going forward because they've got so much money that they could be supporting Russia. And most of them live outside of Russia now, so the Western world is now going after these individuals and trying to seize their assets. So I'll give you some more details on that. And then finally, I'll update you on what's happening with PayPal, which is another of the financial service world which is turning against Russia. So before we get into all of that, as usual, if you could give me a thumbs up at some point if you're enjoying this content, I would really appreciate it. And don't forget to subscribe if you haven't done so already. And don't forget that I always include chapters in my videos, so if there's a section you're not that interested in, it's really easy to skip over it and move on to the next. So commodity prices have already started to move up dramatically, and I wanted to go through the key areas in this video just to give you a feel as to what's happening right now and what the potential implications of all of these movements are for the global economy. Energy products are Russia's biggest export. They're the second largest exporter of oil globally, but they also have huge reserves of natural gas, which are either distributed across Europe via their pipelines, which they have installed across a number of different countries, or they liquefy it and then transport it via cargo ships all around the world. The recent sanctions that have been introduced make it more difficult for Russian companies to be able to access capital, so that will impact on some of those energy businesses. But the biggest impact that we're seeing right now is that a lot of countries around the world are closing their ports to Russian vessels. So the UK and Canada were the first to act, but it looks extremely likely that the European Union and America will follow suit. So once that happens, that means that none of those ships will be able to dock to unload all of their oil, and therefore it's likely that we will see a reduction in the supply of oil globally, because it takes time for all of the systems to be able to replace Russian oil with oil from other countries. But in addition to that delay factor, there's also a chance that we could see an absolute reduction in supply in the Western world, because there just isn't enough oil being produced right now to fully replace all of the Russian supplies. The situation with regards to gas is even worse. In Europe, we've got a number of countries that are dependent on Russian gas. Turkey has the biggest exposure, but Germany and Italy also have large exposures, as do the rest of Europe to varying degrees. So if Russia was to switch off its pipelines tomorrow, that would cause a major crisis all across Europe, because this natural gas is being used to create electricity. And obviously electricity is at the heartbeat of every single country. All of industry and all consumers use electricity. So if we saw a 40% fall in the supply of gas, which is what Russia supplies in Europe, then that would cause blackouts and major economic crises in all of the countries. Now, Russia doesn't want to cut off its nose to spite its face, so it's actually still supplying all of the natural gas, and it's likely that that commercial relationship will continue. The big question here is whether or not all of the countries involved want to keep taking the Russian gas. The problem they've got in the short term is they don't really have any option, but in the medium term, there may be an alternative that everybody could look to. So we're definitely seeing a move towards more renewable energy, and it's likely that a lot of countries will make plans to stop their reliance upon Russian gas. So let's have a look at what's been happening to the prices since news of the invasion of Ukraine broke. Oil prices are now touching $120 per barrel, and that equates to a rise of 24% since the 23rd of February. These are the highest prices that we've seen for Brent crude for 10 years and for 14 years for West Texas Intermediate. The situation with regards to gas prices is even worse. Dutch gas prices hit a record €208 recently, which is more than double the price it was sitting at on the 23rd of Feb. And British gas prices have touched an all-time high of 490 pence per therm, which is touching a 150% increase in the last couple of weeks. Coal prices are also up at extremely high levels and have increased 85% since the 23rd of February. Russia is also a big exporter of food products. Wheat is now sitting at a 14-year high and is up 37% since the 23rd of Feb. And corn has also increased 15% and is now sitting at its highest level since 2012. Russia also has large supplies of certain metals that are required in industrial processes. Aluminium prices have now hit a record high and are up 17% since the 23rd of Feb. Nickel is at a 14-year high, climbing 24%. Copper is now also close to its record high, and palladium prices have increased 20% over the last couple of weeks. Now, all of this is bad news for the global economy. These commodity prices are fundamentals. The metal products I've just talked about are used in a variety of products and will drive up prices all across the world. Grains are used as the basic raw ingredients in so many different products, so that will force up food prices, and obviously energy price increases drive up the price of everything, because the production of everything in the world requires energy. So what we're seeing here is a rapid increase in prices. We're talking 20 to 100% across all of the different commodities that I just talked about. All across the world at the moment, we've got incredibly high inflation. And all governments have a target of bringing down that inflation, because the longer high inflation goes on for, the more likely it is that we're going to hit some form of recession. Now, the change to all of these commodity prices is going to fuel inflation further. So it's likely that we will see inflation going even higher over the next 3 to 6 months. It's impossible for governments to be able to counter the impact of these commodity price changes. They can't just tweak interest rates and it brings down demand, because these commodities drive the price of basic materials. They're driving the price of food, and energy prices are indiscriminate. Everybody needs electricity and heating to live, and therefore as the price of that goes up, it impacts all people. It's not just the rich people, and it's not something that you can decide that you don't want to buy. You have to buy it. It's an essential. So these price increases will drive up inflation, and they're going to drive up inflation very fast. So it's likely that the record levels we're seeing now will be pushed even higher by the summer of 2022. And the implication of that is potentially that it could push the world into a global recession. So the major Russian banks are all currently under sanctions, which prevent them from accessing the SWIFT international payment system and also prevent them from raising additional equity and debt in the international markets. And that's causing major problems within Russia, because if you're a company that wants to export goods or import goods, then you need to make payments either way. And if your bank is unable to make those payments, then you need to find a way of firstly getting some money out of the country, or secondly finding different trading partners that you can now start building new trading relationships with. And the biggest trading partner that Russia has, both for imports and exports, is China. And China have remained relatively neutral through the whole of this crisis. They abstained from the recent vote on the Russian invasion, and they are still dealing with Russia on a trading basis. And Russian firms have been desperate to open bank accounts with the Chinese banks over the last week or so. A variety of the Chinese state-owned banks have branches in Moscow, including Industrial and Commercial Bank of China, Agricultural Bank of China, Bank of China, and China Construction Bank. And it seems that hundreds of companies in Russia are making a bid to try to open accounts with these Chinese state banks in order then to be able to start making payments and dealing with more Chinese counterparties. And I think this probably makes sense for these Russian businesses, because the Western world is closing down to them. Nobody wants to be dealing with Russia, and going forward it looks unlikely that there's going to be a lot of trade between Europe and America and Russia. So Russia will need to find new markets, and China's already their biggest trading partner, so it makes more sense to try to work that relationship further. And what's interesting to note is that the exchange rate between the Chinese yuan and the Russian ruble has dropped significantly. So we've seen the ruble fall around 40% in value compared to the yuan. So it's looking more attractive from a Chinese perspective to make some investments into Russia. So one of the interesting questions here will be whether or not we see some Chinese entities, or maybe even the Chinese state, starting to strike deals with Russian businesses and step into the shoes of all of these exiting Western businesses. So one of the big examples that I talked about recently is BP. BP has around about $25 billion invested into Russia right now. And it's a big counterparty of one of the big energy firms. So there's an obvious opportunity there for China to step in where BP are exiting and then become a joint venture partner on all of these developments. So there's lots of oil and natural gas and lots of really rare metals that exist in Russia that could be very attractive to the Chinese markets. So it'll be interesting to see whether or not this does lead to a strengthening in relations between Russia and China if all of the Russian companies start moving all of their banking to Chinese banks, and we see the trade increasing further and possibly all of these joint ventures being taken over by Chinese investors. So I wanted to touch briefly on the Russian oligarchs. As you'll be aware, the sanctions that have been imposed against all of the Russian entities also apply now to Russian oligarchs. So the US, the UK, Germany, France, lots of different countries are now targeting these incredibly wealthy individuals. And there has been a list put together by all of the different countries of the people that they see as having relationships with President Putin. So I wanted to just give you a little bit of background and then talk about some of the asset seizures that have taken place over the last few days. So the Russian oligarchs were all created in the early 90s when the old Soviet Union was broken up, and a lot of the state-owned enterprises were then put into private ownership. And generally speaking, there was one individual who took the majority share of each different company, and they became super rich and known as oligarchs. So there's no real details as to how all of these individuals got to the position that they were in, but essentially they had to be very well connected in the old political structure, which had a lot of influence from the KGB. So there's a lot of question marks as to why did these people get selected? Why were they given an oil business or a natural gas business or some other entity that was clearly worth hundreds of billions of dollars, and they were gifted it for free as part of the breakup of Russia? So that's essentially a very, very loose background on how the oligarchs were created. But what we've got today is a variety of Russian individuals who are incredibly wealthy. So these are all billionaires, and they're making money from Russian businesses. So when previous sanctions were introduced, certain oligarchs were identified, and life was a slightly more difficult for them. It was a bit more difficult to do some transactions, and maybe they couldn't invest into certain sorts of assets. But this time round, the governments are going after the oligarchs hard, and we're now seeing yachts and private jets and apartments and anything of huge value being seized by the authorities as part of this crackdown on all of the Russian influence. And one of the reasons they're doing this is that they don't want the government in Russia to continue getting lots of financial support. They're trying to cut off all of the different forms of finance. And if you've got a variety of people with billions and billions of dollars sitting outside of Russia, then clearly they have the ability to assist with anything that is needed. So that's the theory, but I wanted to share a few photos of the yachts that these guys own that are now being seized, because these things are incredible. They look actually a bit like commercial ferries. They are massive. The German authorities have seized a yacht owned by Alisher Usmanov, who's a former co-owner of Arsenal Football Club. And this yacht is reportedly the largest in the world by gross tonnage and is valued at around about $600 million. It has the largest swimming pool ever installed on a yacht, alongside 2 helicopter pads, a beauty salon, and room for 24 passengers in 12 suites. When it's sailing, the yacht has a crew of 96 people who operate it. The French authorities have seized a vessel owned by Igor Sechin, who's a long-time ally of Vladimir Putin and the boss of Rosneft, one of the largest oil companies in Russia. Now, this yacht is a bit smaller, but still has a value of over $100 million. And the third yacht that is currently under investigation and is being held in a harbour in Hamburg is called the Luna, which is a 115-metre super yacht that was previously owned by the Chelsea Football Club owner Roman Abramovich and has now been sold to another Russian oligarch. Italian police have seized a yacht owned by Alexei Mordashov, the richest man in Russia. This oligarch made his money from the steel industry, and his 65-metre or 215-foot Lady M was impounded in the northern port of Imperia. Lady M can host 12 people comfortably in its 6 cabins and has 14 crew when it's fully staffed. So the walls are closing in on the Russian oligarchs, and it's interesting that they're now trying to move all of these yachts to the Maldives because there's no extradition treaty in place in the Maldives. So they see that as a safe haven. But the US have recently launched their Klepto Capture Task Force, who are a squad of people based in Monaco, and they're designed to identify and seize these luxury assets from all of the oligarchs. So it's likely, I think, that we'll see over the next few weeks more of these yachts being seized and we'll probably see some private jets and apartments, and we may even see the bank accounts of all of these oligarchs being frozen. So everybody's now honing in on the guys who've taken large amounts of money out of Russia and who are still in a position to be able to fund President Putin and all of his different overseas concepts. So it's interesting to see what's happening financially to these people and whether or not they will be made bankrupt, whether they'll be arrested. Who knows what's going to happen, but it's going to be an interesting period. PayPal has announced that it's shut down all of its services in Russia with immediate effect. So this follows on from the news that we heard from MasterCard and Visa. And obviously the international banks have applied sanctions against a variety of Russian companies and prevented all of them from accessing the SWIFT system. So this is just a further closing in of Russia. It's preventing all of the companies and key individuals in Russia from being able to make payments and move money in and out of the country. So we're essentially seeing a complete shutdown of all financial services from the West to Russia. And what that's likely to do is make Russia look at alternative options. So there are some options available that compete with SWIFT that have been set up by other nations, and China use some of those options. So I think all of this is probably pushing Russia more towards its relationship with China and all of the countries that operate outside of the Western alliance. So what's the summary and conclusion today? Well, the biggest concern right now for the global economy is the rapid increase in commodity prices. In many cases, we can't just source another alternative supplier. There just isn't enough grain in the world to be able to switch supplies straight to the Western world and not have any impact with regards to shortages or prices. So we will definitely see price rises on a rapid basis over the next 3 to 6 months. It's also possible that we could see shortages, we could see empty shelves in supermarkets and panic buying. But a bigger concern than food is the energy situation. So Russia is the second largest exporter of oil, and it's just not possible to be able to switch out that supply and carry on as normal. Prices have already started moving high, but they will go higher. I think there is a possibility, if this crisis carries on for much longer, that we could see oil certainly touching $150 a barrel, and it possibly could even get more towards $200 a barrel. And if you think where we were a year ago, that is a doubling, possibly even a trebling in energy prices. And we've already got energy prices at a record level, and that is driving inflation because energy is a fundamental cost in the production of everything. And also, all consumers around the world use energy directly. So it comes out of all household budgets. So the increase in energy prices is going to cause a massive problem for the global economy. I think it's the single biggest risk to a recession. It's probably the factor that will tip us over into a financial crisis. And we don't know yet what's going to happen with regards to Russia. At the moment, they're continuing to supply gas to Europe, which is keeping the lights on in a lot of countries all around the continent. If Russia suddenly decided that it wanted to switch off that gas supply, there would be a major problem in some of the biggest countries in Europe. And we don't think that's going to happen as it sits right now, but it could do. If this crisis escalates further, if NATO gets involved in the conflict, then we really don't know what could happen. And also, there is a possibility that we lose the supply of some of this natural gas because some of these pipelines are damaged, either by a stray missile or by terrorist incidents. Maybe somebody in Ukraine decides that they don't like Russia benefiting from all of this gas supply and they decide they want to blow some of these pipes up. There's all sorts of eventualities that could happen. But this isn't something that we can solve in a short space of time. So for 2022, we all have to face the reality that energy prices are going to be at record levels and could go even higher than we expect right now. And when that happens, that is going to hurt everybody all around the world. So it's quite likely that this crisis in Ukraine could cause a recession all across the world during 2022. The other point I wanted to highlight in this video is the increasing relationship between Russia and China. It's pretty obvious that if the rest of the world cuts off Russia, that it's going to look at what its alternatives are. And the second biggest economy in the world is China. And China and America don't have a great relationship, so China is looking for an international partner to do things with. And Russia is now sitting with lots of businesses that are being exited by their founders and owners, and they will want some financial support. So the obvious solution to that problem is that they should start talking to China. We're already seeing it now with the banking side of things. A lot of the companies in Russia are trying to open Chinese bank accounts so that they can start making payments, and they're going to start dealing with more Chinese counterparties. So I think the knock-on impact of this conflict is that it will strengthen the bond between Russia and China, and we could see a major superpower relationship emerging out of the other end of this crisis. And that will have implications for the global economy also, because you've then got two of the biggest suppliers to the world between them. And if they form a bond and a pact, then they could start racking up prices even more. So there's a lot of different risks that are coming out of this conflict. So I'll keep you posted of any further news and developments as and when they happen. If you've liked what I've said today, then please give me that thumbs up, and don't forget to subscribe if you haven't done so already.